Here's another tutorial from merchantaccountservices.tv, making sense of payment processing. What we're going to talk about today is rates and fees. When it comes to rates and fees on a merchant account, there are so many different variations. Some companies charge per item or per percentage basis, and sometimes a combination of both. You could have a per transaction fee plus what's called a discount rate, or an MDR, which is a merchant discount rate, which is a percentage of your sales volume. Some fees are set by the merchant account provider, but the majority of the per item and percentage fees are passed through the merchant account provider to the credit card issuing bank according to a scheduled set of rates called interchange. And interchange fees are set forth by Visa and MasterCard, and they are dependent on what type of card is used or how a card is transacted, and sometimes a different rate as well depending on the category of business the business is involved in. So for example, a grocery store receives a slightly different rate than restaurants versus a retailer versus a taxi cab company. So the category of business does change the interchange rate. So does mostly the way you transact it, whether you're swiping across a machine versus whether you're keying it in, or whether you're phoning it in over the phone, or whether it's an e-commerce transaction. Each one of those have a different risk associated with them on the way it's transacted, and so they have a different interchange rate. Essentially, interchange rates are the buy rates for the credit card processing companies. As well as different rewards cards have different rates. Hence, each reward card has points that they need to pay out back to the consumer, and so that particular card may cost more to process. So if maybe you have some sort of Infinity card or some sort of Air Miles card that generates more than normal Air Miles, well, they have to pay that out to the consumer. Therefore, the buy rates on transacting that card have a tendency to usually be higher than just a card that has no rewards points associated to it. Now, there's about over 225 different levels of interchange buy rates in the US, and in Canada there's over 35. I'm not too sure about Australia and UK, but I would imagine they sort of follow the very similar layout of how interchange is laid out. Usually it's public notice, so if you go to the Visa or MasterCard sites, you should be able to find the interchange buy rates. And then what happens is the credit card processors that supply the services to the merchants usually take those interchange rates and boil it down into simpler pricing. For example, 3-tiered pricing or 6-tiered pricing, and they have a few other commonly known business models for it. However, each company can really structure it completely different, and one company's 3-tiered pricing could be completely different from another company's 3-tiered pricing, because one company may stick a certain amount of rewards cards underneath what's called the mids, and another company might take those reward cards and stick them underneath what's considered the nons, and vice versa. And so it can become very confusing to understand and really compare one company to another company, because they're really not apples to apples, even though they both maybe operate on 3-tiered pricing, or maybe each company operates on 6-tiered pricing. So you really have to sort of sit down and figure out exactly how your company transacts, and look at each company and find out which cards are falling underneath which umbrella, whether it's qualified mids or nons. So we're going to just quickly talk about sort of how 3-tiered pricing works, and it really just breaks down into this. Usually it's a qualified rate and a mid-qualified rate and a non-qualified rate. That's sort of the most sort of basic way that most credit card processing merchant account companies break it down into. And usually a qualified rate is usually anything that's swiped across the terminal or considered a standard transaction. It usually has the lowest risk of processing because the card is present and they're swiping across the terminal and they're getting instant authorization. And there's a few other things that come along with that. And they're usually, cards that don't have any rewards points attached to them, or they're not considered business or corporate cards. Now, a mid-qualified rate is usually a consumer card that is, sometimes keyed in instead of being swiped, or sometimes that could be non too, or there could be some sort of special kind of rewards or business card associated with it. Non-qualified rates are usually keyed into the terminal instead of being swiped, and a lot of times don't have the address verification that's included with it. So if you key it in and you do an address verification, a lot of times you can bring your rate down so it doesn't cost you so much that it's just mid-qualified. Another thing that makes a transaction non-qualified is a lot of times if merchants don't batch out or settle their transactions in the same day. So by leaving it on to go on to the next day, or sometimes merchants want to settle just once a week if they're a really small merchant, that can really drive up your costs and make all your transactions fall underneath the non-qualified rate, which can cost you the most. So usually qualified is the lowest, then mid, then non, and three-tiered pricing is very common. Now, some companies offer six-tiered pricing, and this is something that usually happens in the US versus Canada. Again, I'm not super familiar with the UK or Australia. I'm going to have to get some experts who know more about those industries to do some tutorials on how the pricing works there. But the six-tier pricing came out because of the Walmart lawsuit, which they won. And it's to compete against the PIN-based debit cards. And essentially what happened was Visa, MasterCard lowered the interchange rates a lot on debit cards, well below those that you would see on credit card pricing. And you got to remember, in the US, for Canadians who are watching this, debit card transactions are done on credit cards down in the US. And in Canada, a debit card is functioned through the Interact Association currently as we speak. And it's just set up a little different. It's usually just a per transaction fee. But in the US, debit cards have a transaction fee and a discount rate associated with it. But what happened was they dropped it way low on the debit cards, and it just created a couple extra classifications for debit cards, which made, for a total of like a 6-rate classification, so which is called the 6-tiered pricing. So instead of, you have the qualified mids and nons, you'll also have 3 more that are for the debit cards. Now, some companies also fall underneath what's called interchange plus pricing. And basically what they do is they say, okay, here's interchange tables, which is public notice on the Visa, MasterCard sites. You're going to say you're going to pay this plus point whatever percent for us to put the services there. So as interchange changes, your rates will adjust with interchange, whether it goes up and down, and then you pay a flat per transaction fee or a discount rate on top of that. So it could be 0.25% or what's called in the industry is 25 basis points, or it could be 50 basis points, 100 on top of whatever interchange is. So it doesn't matter what it is, you'll get it out of the buy rates plus whatever arrangement that they've made. Now, there's also something called billbacks, which is fairly new. You won't find billbacks in Canada, but you see it in the US. It may come up to Canada, and it's very confusing. In fact, even I have a hard time understanding how it works. But basically, the way it works is it's a pricing model and a variation on interchange plus. It has like a ton of variations. And the concept is that the merchant pays interchange on the statement that the transaction took place, and then pay all other fees like dues, fees and assessments, etc., or downgrades on the next month's statement. So basically, any transactions you did this month, you're just going to pay a flat interchange fee, but the following month you're going to pay whatever the markup actually is supposed to be. It's called billback. So basically, you get a little bit extra room on paying your fees, but it's pretty darn confusing, and I think it just might be a bit misleading. But that's just my opinion. That may not be everybody's opinion. And again, that's called billbacks. So those are the 4 sort of basic pricing models that most merchant account providers follow. However, each merchant account provider can structure this completely different, and so you really do want to spend your time with a good merchant account broker or consultant or someone who really knows, who can go through and figure out which cards are underneath which umbrella and which company would be best for you. Again, you may not know until you start running your business. If you're a new business, you may not know how your customers transact with you, and sometimes you may start with a company and you may have to reevaluate in 6 months to a year. You should reevaluate your merchant account once every 12 months anyways, even though most agreements on most merchant accounts are usually around 3 years, but it can range again from no contract to I've seen as high as 6 years. Anyways, that's just a basic introduction on rates and fees. We'll make another tutorial, just keep this one short, that gets into the nitty-gritty and more of the specifics of how each rate works. Thank you. This was another tutorial by merchantaccountservices.tv, making sense of payment processing.